Hey there. I just wanted to pop in really quick to address a question that Donnell had in the Telegram group that I thought was really good and can be a help for everyone moving forward. It was in regards to the trade alerts that is coming through and the triple arrow and how sometimes the direction is opposite. So basically, what Darnell was asking was in regards to Odd Chef, is what you're seeing right now, in regards to Odd Chef. Now, the trade alert came in for a buy. For a buy. Let me make sure. Hold on. That trade alert came in for Odd Chef for a buy. Yes. And then with okay, so he basically was saying if the trade alert that comes in is opposite of what the triple arrow is saying, what do you do? What do you do? So the charts on his charts, the small arrow was pointing down, and we are in a buy position. Okay, so let me just address that. The triple arrows come in, our confirmations are set, right? The triple arrows come in. You're going to have price go up and down. That's just the nature of price movement, right? So price will go up and down. And in this case, with the alert that was called, they both are going in the same direction, meaning the trend on the triple arrow is bullish, as you can see, and the trade alert that came in was a buy, was bullish as well. So you're on the right side of the trade. And also, you always want to do a quick analysis to see where is price. Is it above my 50? If it is, I know that I am in buyer's territory, which again supports the direction that the trade alert called. Also, look at your MACD. Everything tells a story. Remember that. Everything tells a story. So the MACD, the moving average on the MACD is above the midline, right? Which is, again, buyer's territory. Is buyer's territory. So in this case, what I do is there's two ways that you can consider taking the alert. One, you can take the alert only if it lines up with the direction of the triple arrow. I think that you'll be safe. You're on the right side of the trade. You can also take the alert if it does not. It just depends on where price is at the time. If, say for instance, let me give you another example as a matter of fact. The USDJPY that was called. That was also called. It was a trade alert in the group for that. Right? So let's go to that. Okay. Hello, everybody. Listen, I wanted to just pop in really quick to address a question that Donnell put into the group. I thought it was a great question and a great opportunity to speak on that so that it can help everyone. So great question, Donnell. I want to address. So basically, this question is regarding the trade alert that came in odd CHF. Odd CHF. It came in for a buy. It came in for a buy. And so basically the question was, if the trade alert is a buy, but the triple arrow is a sell, or vice versa, if it conflicts, what do you do? You know, what position do you take? Now, there's a couple of ways that you can tackle that. One, you can, if you take the trade alert, you can take the trade alert only if it lines up with the direction of the triple arrow. So if the trade alert is calling for a buy and the triple arrow is a buy for the same time frame, then that could be one of your confirmations based on whether or not you take that trade. So you'll always be on the right side of the trend if you go that route. Now, you can take the trade if it's opposite. If the trade alert calls for a buy, like in this case, but the triple arrow is a sell on the hour time frame, okay, and it's based on any time frame you trade on, okay. So I do the hour. So on the hour, it is a sale. What you want to keep in mind is go up one or two, or at least to the daily, to see what the overall trend is. Because what I have found is that most of the trades that are called, I would say 50-50, that the trade alerts that are called is based on the overall time frame on the daily. So that's why you can have a conflict in direction from the triple arrow and the trade alert and still hit profit, because the trade alert is based on the big trend, the overall trend. So with that being said, what you can do is you come to the triple arrow, and I will use my triple arrow as my foundational basis. So you come to the triple arrow, you see that it's different. Like this is calling for a sell, and the trade alert is calling for a buy. So what do? Well, you do a quick analysis to see where is price right now. Where's price right now? Now, when this was called around 2, I believe. And the only reason I put it in the group is because it had not hit TP1 yet. So there was still an opportunity. So right around 2 o'clock, so it is 7. So this is 6, 5, 4, 3, 2. So right around in this area here is where it was called. Even though Triple Arrow said that this is going down, the trade alert was called right here, okay, right in here. So that means somewhere when at the closing of the 1 o'clock candle, so somewhere in this candle is when it was called. So as you can see, where's price? It's above the 50, which means it's in buyer's territory at that time, which justifies again why they call for a buy. And also, you want to go to your higher time frame, the daily, and see what direction is it going in on the daily. Voila, it's going in a bullish direction on the daily. Okay, don't have the triples yet, but it's enough. Remember, each candle represents the time frame that you're on. So this is the daily chart. So each candle represents 24 hours. So this candle right here, let me put a vertical. This is how you analyze the price based on the alerts that were called. So this candle right here was the candle in which the trade alert was called. It was within that 24-hour period. So let's go to, remember when I said what's going on the higher time frame has already happened on the lower time frame. So let's see, based on this one 24-hour candle, let's see what was happening on the lower time frame. Because even though this is a small candle, a lot of buying and selling has taken place in there. So let's go to the 4-hour. Okay. Now, on the 4-hour, this vertical line represents that 24-hour candle on the daily. Everything after this line has taken place in that same little candle on the daily. So what is, just looking at the price action after this vertical line, where is it? Is it a predominant buyer's territory or seller's territory? It's in a buyer's territory. Buyer's territory. That's why they called a buy on that trade alert, because you're in buyer's territory. This is how you break that down. Then let's take a look at the moving average and the MACD. Where is it? It's above. Let's look after the vertical line, right? Because again, all of these candles and what's going on, all of that is in that one candle on the daily. Okay. And okay, so what's happening on the MACD? It is above overall bullish territory. Overall bullish territory. So this is why they call for the buy on that trade alert, and you could have taken it and you would have, let's see if you would have hit profit, because to take profit one, well, let's drop down to the hour, because I'll do it on the hour. So this is what's going on. Now I'm gonna do the same thing. Put my vertical on this candle here, which is Remember, each time frame, the candle represents that time frame. So this one little candle right here, it represents 4 hours, right? And I don't think the 4 hours is up yet. So you said 5, 6, 7, 8, 9. Okay, so this candle opened at 5. It's going to close at 9 because it's 4 hours. So we have buying and selling pressure going on in here, right? So let's see what it looks like on the 1 hour. Okay, so this is that vertical line. This is the 4-hour vertical line. Look left of that line. That's the activity that is happening in that 4-hour candle from this candle here and this candle here. Okay, so now you analyze that. What's happening? What's happening? Well, we broke structure, didn't we? We broke structure right here when this bearish candle broke our 50 and closed below. Remember, on the hour, it is a bearish move. It's a selling trend. So we broke the 50 and we're looking to take this thing down. But that's at this point. Remember, the call was made around the closing of this particular candle right here. So had you gotten in around this in this candle somewhere, let's take it up to TP1 to see if you would have made TP1. This is another reason why I say always go for the lowest hanging fruit so that you can, pretty much lock in price, lock in your possibility or your probability of profiting on that trade. So TP1 is 59,507. 59,507. 59. Okay, so TP1 still hasn't hit 59,507. 59. You see the number? 59,507. Okay, so we're looking at basically right at the top of this yellow arrow is roughly where the TP1 is. So price would have to, retrace back up, which it can very well do that. It can very well do that. Why? Because the overall trend on the daily is bullish. It's bullish. So in other words, when the triple arrows appear here, you're going to see that retracement on the lower time frame on the hour, because the hour is selling, but the overall is buying. So once the triple arrows appear, you're going to see a retracement on the hour. So on the 4 hour, what are we looking at on the 4 hour? I'm just trying to share with you what I look for when I am assessing the trade alert against the triple arrow. The triple arrow is what I base things on, and of course by price action and such, right? So on the 4 hour, we're still in bullish territory. We're still in bullish territory. Now here's the thing. We have a resistance dots right here, okay? And of course we have our trend line right here, okay? So let's move the vertical line out of the way because I want to show you the potential of where price can potentially go on the 4 hour. Now, when you do your analysis at the end of the day, if it just don't feel good to you, don't trade it. Do not trade it. Do not trade it. So let us take our pip counter and see. I'm going to put it right at the bottom here of where price is. Oh, there we go. And I'm going to take it up to my resistance dots, which tells me that price, go up there. And what do we have? 64 pips from where price is right now to our resistance dots is 63 to 64 pips. Okay? And what is the price that coincides with that? 59550. What is the TP1 on the trade alert that was called? 59507. So you see, there is a great potential that you will still hit that TP. These are the things that you want to do when you're making the determination, when you're analyzing and determining if you want to get in the trade. Always do a top-down analysis and break it down one time frame at a time. So on the 4-hour, where are we? We are in bullish territory, which supports the buy call that was made on the trade alert. Okay, what is it doing? It's in consolidation right now. We got a couple of dojis too. Dojis mean there's going to be a change in direction. There's going to be a change in direction. So when it breaks this trend, and let's just go to the trend line. We can even do that. So this is still a good trade, even though on the hour it is going in the opposite direction. So to the trend line, we're looking at about 50 pips to the trend line, about 44 to 50 pips. The price there is 59,265. Now here's the thing: you don't have to go for TP1 when you're doing your analysis. If you're doing 20 pips, just take it to 20 pips. If you want to do to the trend line, take it to the trend line. Even if it's less, if it's before your TP1, you don't have to go for the TP1, especially if there's an opportunity for you to, make your profit sooner. So make those determinations for yourself as well. So that's what you would do. Now, once it hits the trend and breaks the trend, it's going to bounce up on it. That's why you have this consolidation here going on, but it's going to bounce up on there. And then once it breaks it, if it breaks it, then you are looking at a bearish big arrow populating. That's typically what happens when it breaks structure. That's what happens. The next big arrow actually populates. So that's what can potentially take place. So hopefully you all got something out of that. That's what I do when I have a conflict in directional support from the trade alert and triple arrow. Triple arrow is my base. This is what I use to analyze the market, And as you can see, price has hit a support level right here, pushing this candle right here, pushing it back up. Now, if it goes back up and above the 50 and close, then again, it can very well push up to your TP1, which we definitely saw where that's very possible on the higher time frame. So hopefully that has answered that question and cleared that up for not only Darnell, but for everyone. When you get a call, a trade alert that is opposite direction of what the triple arrow is calling, basically just do a quick analysis of where price is and map out your 20 pips. If you're doing 20 pips, map that out, and you can take the trade. But I always stress, if you don't feel good about your analysis right now, don't take it if it conflicts. But if you get a trade alert that's bullish and the triple arrow on the time frame that you're trading is bullish, then you're on the right side. Both are singing the same song. Then take the trade. So you have those two options. Okay. So hopefully that helped. Talk to you on the next one. Bye bye.